Wall Street making a bit of an about face today following Friday's big sell-off. The Dow, the S&P 500, and NASDAQ all did close up in the green. The NASDAQ was up more than 1%. You had some stronger than expected manufacturing numbers helping drive today's gains. But, of course, those coronavirus fears still persist. Your next guest is one of Wall Street's biggest bulls, and maybe now he's on pullback watch. Let's find out and bring in Julian Emanuel. He is BTIG's chief equity and derivatives strategist. Okay, I think you had, Julian, by the way, welcome. Good evening.
Great to be here.
The third highest target on the S&P 500 of the watch strategist, correct?
Yes.
Are you still there, or are you taking that number down?
No, we are still there. And actually, if you think about it, at December 31st, that upside only represented about 6%. So from that point of view, there is still a note of conservatism going on in the community. We look out and we look at election hedging. There's still conservatism going on there. The thing is that the market, even if we didn't have the coronavirus as a catalyst, we got so overbought in January. We look at the monthly relative strength index. You hit 70, 13th time in 40 years. Two things tend to happen. Number one, looking out medium and long term, stocks continue advancing, double digits. There could be upside risk to our 3450 number. But the bigger picture right now, in the here and now, is that things become more volatile. And with what's going on politically and what's going on in terms of the public health, a pullback.
We've got the second biggest economy in the world effectively on lockdown. We've got concerns about pandemics. We've got people being quarantined at American universities now. Arguably not a lot of cases, thankfully, in the United States yet. But are you surprised we haven't seen more of a pullback, more volatility? Why do we go up today when we lost 600 on Friday?
The ISM manufacturing number was very
the ISM
positive.
Manufacturing number, which they pulled off because they changed the data in, is going to overcome concerns about coronavirus.
Well, we think ultimately you're just in this period where there's going to be volatility to the upside and volatility to the downside, and you're going to have a lot of headline risk. And so, look, if we get an outcome in Iowa tonight that the market interprets as something that's a threat, say the progressives do even better than expected, or the moderates do not do as well, that could be something that causes a pullback.
So wrap this up on a macro level for me on sectors, just to give the viewers something to look at here. When you look at tech, that's been outperforming. And when you look at these growth names, these momentum names, but what hasn't performed for me has been my chemical play. So I have an idea. My premise is that with all this ESG investing, when you screen for these, a lot of the chemicals are being thrown out. But the truth is, they're just not sexy when you're comparing it to a Tesla. When are these chemical or cyclical plays going to start, if ever, to perform?
So there's no question about the fact that ESG has had a huge influence on some of these deeper cyclicals. Certainly energy, you just spoke about it. We would liken it to, thinking about a higher volatility environment like 2018, right? Nothing moved in a straight line throughout 2018. We think we're returning to that. You think about something like the tobacco stocks in 2000, when every executive raised their hand in front of Congress and talked about tobacco. And over the next 20 years, tobacco stocks outperformed, despite the fact that they're continually being downsized in those types of portfolios. So from our point of view, what you could see and what you've had from time to time over the last several years is when technology momentum slows or reverses, money finds its way and rotates back into those areas.
All right, Julian Emanuel, BTIG. Julian, we appreciate your views as always. Thank you very much.
Thank you.
Karen, you remain optimistic, macro?
I do, but I actually was hoping we'd come and see a down day today. We had the bad sell-off on Friday. China opened, down, I guess, 7 point something, I forget. And they're pumping money there, 173 billion. But I was hoping we would see a down day, more of a flush out, and then hopefully sort of a turnaround Tuesday. This rally today seemed like a bit of a head fake. I wouldn't really be a buyer on this, but I am more optimistic in the long term.